Good evening. Today is July 12, 2026. Sunday, the Nasdaq Composite led the decline driven by a broad rout in the artificial intelligence sector. Investors are reacting sharply to new developments coming out of China, causing significant volatility across the tech-heavy index and raising questions about the future of major AI infrastructure companies. The Nasdaq Composite Index chart shows a steep downward trajectory as trading volume spikes dramatically throughout the afternoon session. The primary catalyst for this market downturn appears to be the emergence of DeepSeek, a new AI model from China. This development has sparked fears that American tech giants may lose their competitive edge in the rapidly evolving AI landscape. Consequently, makers of AI infrastructure have suffered steep falls, with many stocks dropping by double digits in a single trading session. A wide shot of a modern data center with rows of server racks blinking with blue and green lights as technicians in white coats walk briskly between the aisles checking equipment. Among the hardest hit was Model, the world's leading chipmaker, whose stock price plummeted by 16%. This significant drop reflects the intense pressure on companies that provide the essential hardware for artificial intelligence development. The steep decline underscores the market's sensitivity to any perceived threat to its dominant position in the global technology sector. A close-up of a university graphics processing unit chip on a workbench with a technician's hand using a magnifying glass to inspect the intricate circuitry under bright laboratory lighting. While management bore the brunt of the losses, other major tech players were not spared. Broadcom and other tech giants also saw their shares decline as panic fueled the broader sell-off. The interconnected nature of the tech supply chain meant that fears regarding one company quickly spread to others, amplifying the overall market decline. A busy trading floor with multiple large screens displaying red downward arrows and falling stock tickers, as traders in business attire look at their phones and tablets with concerned expression. Despite the initial panic, some analysts argue that the sell-off may be overblown. They suggest that DeepSeek's emergence does not necessarily signal the end of U.S. dominance in the AI sector. However, the market reaction has been swift and severe, indicating that investors are currently prioritizing caution over long-term growth potential in this volatile environment. A split view of a news anchor speaking seriously into a microphone with a background graphic showing a globe with digital network connections pulsing in red. Turning to the commodities market, precious metals also faced downward pressure today. Gold prices settled at a lower level, marking a decline of 1.4%. This drop means gold has now fallen in 2 of the past 3 trading sessions, signaling a shift in investor sentiment away from safe haven assets. Like a stack of shiny gold bars sitting on a velvet cushion in a secure vault, with a security guard in uniform walking past in the background holding a flashlight. Silver fared even worse, falling by 2.5% and extending its losing streak to 3 of the past 4 sessions. The decline in both gold and silver suggests that investors are rotating out of traditional stores of value, possibly in favor of cash or other assets. This trend highlights the broader risk-off sentiment dominating the financial markets today. A close-up of silver coins being poured from a metal scoop into a glass jar, with the silver pieces clinking and reflecting the light in a jewelry store display case. In the financial services sector, market watchers are closely monitoring several key players for signs of stability. Reports are highlighting the performance of Experian and Sophie Technologies, among others, as analysts try to gauge the broader health of the industry. These firms are seen as bellwethers for consumer credit and financial confidence in the current economic climate. A person using a smartphone app to check their bank balance with a blurred background of a busy city street and pedestrians walking by in the rain. Meanwhile, in the agricultural commodities market, Arabic coffee prices have surged to a record high. This dramatic increase is largely attributed to the withdrawal of President Trump's threats to impose tariffs and economic sanctions on Colombia. The relief from potential trade barriers has actually triggered a supply-side reaction, pushing prices to unprecedented levels. Rows of coffee plants with bright red cherries hanging from the branches, with farmers in hats harvesting the beans by hand under the bright tropical sun. The situation in Colombia was particularly volatile, with traders digesting the sudden shift in trade policy. The initial threats had created uncertainty, but their withdrawal has led to a different kind of market pressure. As a result, Arabica coffee prices have hit a record level, reflecting the complex interplay between geopolitics and commodity supply chains. A close-up of green coffee beans being roasted in a large industrial machine, with steam rising and the beans tumbling inside the rotating drum. To summarize the day's events, we saw a broad sell-off in tech stocks driven by AI competition fears. Precious metals declined as investors moved away from safe havens, while coffee prices hit record highs due to trade policy shifts. These divergent trends highlight the fragmented nature of today's market dynamics. A montage of quick cuts showing a falling stock chart, a gold bar, and a coffee cup all overlaid with a red market update graph. Investors should remain cautious as these trends may evolve rapidly. In the coming days, the tech sector's reaction to DeepSeek could set a precedent for how AI developments impact valuations. Similarly, the coffee market's volatility serves as a reminder of the sensitivity of commodities to geopolitical news. A wide shot of the New York Stock Exchange facade with the American flag waving in the wind as people enter the building in the morning light. We will continue to monitor these developments and bring you the latest updates as they unfold. For now, that concludes our financial news segment. Thank you for watching and stay tuned for more coverage on these evolving market conditions.